Hey guys, good evening. This is Mr. Oxy coming at you live from Palm Beach in Florida. It is Wednesday. It is October the 6th, and there's a lot of stuff going on. So let's quickly take a quick look at just a couple of headlines, and then we'll switch over to taking a look at your favorite stock and mine, Occidental Petroleum. Is it a time to buy Oxy or not? Should you hold? Should you buy? Should you sell? What should you do? Anyway, some news headlines. Massive oil spill at Texas refinery causes road closures, but authorities say no danger to the public. This was Marathon. And this one says the energy crisis is homemade thanks to fixation on climate change while ignoring other aspects. And this one's the most interesting to me. Coal crisis reveals how energy supply has become a major problem for China. Access to energy has become one of China's major foreign policy considerations, and recent events show why. It simply doesn't have sufficient resources of its own to power what has become the world's largest industrial hub. Interesting stuff. These are all things that are in the news right now that are kind of grabbing my attention for a variety of different reasons. But what I wanted to do quickly is take a quick look at Occidental Petroleum. So we have obviously, as a sort of investment or investor community here on YouTube, been active and actively discussing Occidental for now more than a year. In fact, I started my first videos at the time when Occidental announced that they would be issuing some warrants. This is the current homepage of the website, Occidental. Our business is at the top. Sustainability gets a second mention, and right at the bottom, a sustainable energy leader. You can kind of see where this is going. It's very similar to the Exxon video I shared a few days ago, where the entire website is all about being green, sustainable, and renewable energy and all that kind of stuff. So it seems as if all the oil majors are following the same sort of trajectory in terms of trying to show how green they can possibly be. That's okay. It's all right. They can position themselves any way they want. At the end of the day, the supply and demand curve is what it is. I went to a website called Investor Observer. I'd never visited there before. It says Occidental's price was hovering around 32. It has a technical score of 93, which indicates that the stock has traded more bullishly over the past month than 93% of stocks on the market. It's an interesting stat, right? Trading in Oxy has been more bullish than 93% of stocks on the market. So Oxy is in an elite group in the top 10%, and more specifically in the top 7. In the oil and gas EP industry, which ranks 12 out of 146 industries, Oxy ranks higher than 85% of stocks. Good stuff, huh? It has an Investor Observer rank of 59, which is above average. Oxy's 59 means that it ranks higher than almost 60% of all stocks. We've been tracking the lows and highs, and there's an average analyst recommendation of a buy with an average price target of $31. And I'll update you on that one in just a second. This sort of analyst high, which offset by the analyst low, kind of gives you the mean. There are currently 10 analysts covering Oxy. I tend to be sort of bullish regardless of the day-to-day fluctuations, and think Oxy is more likely to trend towards the 45 than towards the 12 in terms of where we are right now. I think this earnings date is incorrect. It's actually August the 8th, November the 8th, not November the 1st. I'm pretty sure about that one. Take a quick look here at the company snapshot. So the market cap has been edging up to $30 billion. In fact, when Occidental's stock price briefly crossed $33 a share, the market cap briefly crossed $30 billion. In case you don't know what market cap is, it's the number of outstanding shares multiplied by the stock price. The 52-week range right now is sitting sort of near, very, very close to its 52-week high of 33.50. Not much change in institutional investors. And the short interest is dropping back slightly. When I first started covering Oxy, the short interest was about 4.5%, edging up to 5. Now it's down to just below 3. I would not be short Oxy at this moment in time. You know, you could argue that you might not want to be long Occidental for a variety of different reasons, but I definitely would not want to be short. That'd be an easy question to answer. Looking at the balance sheet, and of course, remember here we're looking in the rear view mirror because we're looking at June the 30th, and I suspect things are going to look very, very different and favorable for Oxy come the earnings release on November the 8th when they announce their earnings for the third quarter. Total current assets, almost $13 billion. This is something I look at every single time for every stock that I invest in. It's the balance sheet. Remember, the balance sheet equals the assets. The assets have to equal the liabilities and owner's equity. If we look at the liabilities, and here I'm specifically looking at current liabilities, 9.5 billion compared to the current assets of almost 13 billion. I like that ratio. I'll get into that in just a little bit more detail in just a second. Valuation analysis, as I just said, I always look at the balance sheet. One of the other things I always look at is price earnings. And in this particular instance, I cannot look at the price earnings for Occidental because there's nothing to look at. But this is a very good guideline for any investor. The PE ratio is the price divided by the earnings, basically. And I look for a number that's typically below 15 because that's the average of the S&P 500, sort of historically, over a long period of time. So when a stock is trading at a PE of below 15, it could be interesting. So yeah, a couple of things that I look at in that regard. Oxy is a company that is very efficient at generating gross profit, reasonably efficient at generating an operating profit, but less efficient than its industry peers at generating a net profit margin. I think this is also a little slide that's going to change just a little as we go forward, because the thing is, as you reduce your debt, and even as you refinance, perhaps at a lower rate, the interest on that debt becomes less and less and less. And of course, that's reported to us quarter over quarter. So we kind of always get this news in arrears, but as your interest rate plummets or goes down, so does your interest payments as a liability. So if your interest payments go down, arguably your free cash flow goes up. You have more cash because you have to pay less interest. The dividend analysis is not of particular interest in terms of Oxy because at 4 pennies per year or penny a quarter, they basically don't have a dividend. I think the only reason why they kept it at 1 penny per quarter is because that way they can still say they have a dividend, and it's easier to reinstate a dividend than to go to the board to launch a new dividend or shareholder reward plan. From an effectiveness point of view, Oxy is doing a poor job in comparisons with its peers with return on assets, return of revenue per employee, return on equity. It's lagging here. What's interesting about this is, as I've been following Oxy now for the last 2 years or so, the little snapshots that I'm sharing with you in terms of the valuation and not the dividends, but pretty much all the other slides have gradually been getting a little bit better every quarter. The only negative related to that is the fact that we're always looking in the rearview mirror. This is a particularly interesting slide for me, the financial strength analysis. Very specifically, what I look for here is the quick ratio. So when I looked at the balance sheet, I said Oxy has current assets of around 12 billion and current liabilities of about 9.5. So current assets are cash and accounts receivable that are due to you. In other words, quick cash that you're going to generate over the next 30 days or so. And current liabilities basically means obligations that you have in terms of expenses for the next 30 days or so. As soon as that ratio is better than 1, it's good. So Oxy's quick ratio here of 1.15 is not only significantly better than the industry, but paints a very rosy picture for Oxy going forward, especially if they generate massive free cash flow, which I expect in Q3. The interest rate coverage, or MR, for the most recent quarter shows you that Oxy has an interest coverage ratio of 1.51. It lags the industry a little, but it doesn't matter because combined with the strength of its quick ratio for the most recent quarter, Oxy is in a very, very good place. And both these ratios should improve, I expect, when we hear what happened in Q3. Top ranks currently has Oxy still at outperform, which is 9. It's been there stuck at 9 for quite a while. It's a moderate buy. Not too much change here. Everything's pretty much the same as before because they're relying on the same news that we are relying on, which is already now 3 months plus out of date. It's a moderate buy according to the analysts on tip ranks. I see 10 analysts are now covering it. It used to be 9. And the target price, 36.90, which is different from the earlier slide I shared with you where the average was, or the mean was $31. So 36.90 indicates a 15% upside from the current price of around $32. You can also see the highest difference here. The previous one I showed you was 45. This is now 47. Let's take a quick look. Once when I was having a conversation with Occidental Investor Relations, they were saying there are good analysts and bad analysts, but we can't tell you which is which. Well, I'm going to kind of stick my neck out here and say Devin McDermott from Morgan Stanley is actually a pretty good analyst. He issued a note recently, and in his bullish note, he said a step change in the industry's free cash flow and return profile, attractive valuation, upside to consensus estimates, and macro tailwinds, including a constructive view on oil prices and inflation. His favorites are Diamondback, of Ovintiv, Oxy, and ConocoPhillips. The sector has moved to limit exploration spending, we know that, right? They've cut exploration spending quite considerably amid investor pressure for higher shareholder returns, which most companies are paying and distributing to their shareholders. Free cash flow yields have expanded with oil prices now around $80 a barrel, as margins have risen more rapidly than equity values. Now, this is the reason why I put this arrow here is because this is a question that comes up all the time. It's like you see WTI going from 65, it sits there for a while, it goes to 70, then it sits there for a while, it goes to 75. And people say, hey, Mr. Oxy, why, as the price of WTI rises in this particular instance, using Oxy as an example, because they generate most of their revenue from WTI, does the stock not follow? Well, Devin McDermott basically answers the question here by saying, free cash flow yields have expanded with oil prices now around $80 a barrel, as margins have risen more rapidly than equity value. So there's a bit of a lag here in terms of the equity value. Arguably, Oxy should be trading sort of $35, $40 now, as opposed to 30, 32. But the market and the actual performance of the company are not married or tied together. They are very individually different. Well-weighted E&P stocks now have a 17% median free cash flow yield for 2022, assuming only $70 crude WTI, 3 times the market free cash flow yield. So the E&P stocks overall are in a very, very good situation here in terms of free cash flow at the current prices, and Devin is kind of putting his stick in the sand at around $70 a barrel. And of course, we're trading comfortably above that right now. He continues, he says the E&P stocks will still trade at a 60% discount to the overall market. Stocks are discounting an average crude price of $56.50. How about that, eh? In his calculations, he's basically saying that against a 5-year average of 45%, stocks are discounting an average crude price of $56.50. And the combination of capital discipline and rising ESG pressure on the global energy industry is constraining investment in oil and gas. Despite a longer-term trend of decarbonization, demand for these commodities is still growing. So, we talked about ESG quite a lot, and despite the longer-term trend of decarbonization, we should not make light of the fact or ignore or forget that companies like Occidental Petroleum are at the forefront of decarbonization with new initiatives like Oxy Ventures, low carbon ventures. But the demand for oil, these commodities, is still growing. This dynamic could support structurally higher prices over the medium term and a profitable transition to a lower carbon future for the oil and gas sector. So guys, that's kind of a quick wrap and an overview on Occidental Petroleum. What I'd like to know is, where are you at? What are you thinking? So here's where I'm at. So I shared a few weeks ago now that I did actually sell some of my most expensive Oxy stock And just to give you some daylight on what I mean when I say that, my first position that I opened in Occidental, which dates back to early 2019, my share price was about $56. So when I sold, and that was basically on a first in, first out basis. In other words, the stock I bought first was the stock I wanted to sell first, intentionally. I took a loss, right? So I bought the stock for $56 a share, and let's just make it a really easy calculation and say I sold it when Oxy was trading at 26. So I lost $30 per share on that particular one transaction. The reason why I did that is because I was doing some tax loss harvesting, because I had taken some profit on some other stocks. One was an ETF, which is SPY, and the other one that I exited some of my position at, taking some profit, was AllianceBernstein. So I took some profit on one hand, and I took a loss on the other hand in order to minimize or effectively mitigate any tax consequence from that tax event. So that also means, and this is the second part to what I'm sharing with you, that as a result of those exits, I actually have some cash, and that's cash awaiting investment, because cash, which is idle, is just losing value. So there are so many different stocks that we can invest in and that we could possibly look at in terms of investment. If I go back just for a second to my web page here, and I look at my watch list, so yeah, I've sorted some of my stocks by the daily change. So you can see like Energy Fuels down 10%, Paladin, Denison Mines 6%, GoVX 5%, etc. Oxy down here at 2.3. Energy Transfer, of course, also taking a little bit of stress now and strain from the charges laid against them by the Pennsylvania state government. But pretty much, look, my picture looks the same as yours. It's just red all the way down from the top to the bottom. But I have so many choices in terms of what I can invest in. And I'm almost leaning towards saying, you know what, maybe I should just pick up some more Occidental at about $32. But it's a tricky question, right? Because then I could almost say to myself, hey, why don't you just pick up some more Energy Transfer at, $9.50, and at the same time earn the nice big fat dividend that they pay every quarter. So these are some of the stocks I hold and some of the things that I'm long in. So I'm just wondering what you guys think, and maybe you can sort of take a bit of time, comment, and if you think there's something, not necessarily in terms of my current long positions in my portfolio, but something else that I should be taking a look at, I'd appreciate that. And let's see if we can help one another to make some good decisions here and make some money. So guys, on that note, this is Mr. Roxy. I look forward to your comments, and we get the conversation going. And remember, if this is the first time you watch this one of my videos and you like the content, please subscribe. It keeps me at least motivated to do some more. Talk to you guys soon. Bye-bye.